Hello all, welcome to my YouTube channel. In the last video, we have discussed about the chart pattern. So, the last video mostly we discussed about the bullish reversal pattern for a candlestick pattern. So, when you take for a bearish, it's exactly opposite. The candle which I have told, which will be formed on the support, whereas for the bearish, the same set of candle, but the color is different, will get formed at the resistance level. So I'm not going to talk detail about that because it's the same replica. Only thing the color of the candle varies. So maybe any new candlestick pattern which we have not covered in bullish reversal, I'll cover as part of it. So before let's not wait much time. Let's start with our session. Let me share my screen. So this is the last slide which we have discussed. So hope you guys are going through the charts to analyze on the topics which we have discussed till now. So we need to start plotting the things in the chart so that we'll get used to that and we can become expertise in this. So we need to practice. It's not about understanding the concept. We need to practice and look in the live session. So that's the importance of it. Okay, let's start with the session. So next candlestick pattern is a bullish harami pattern. So what does it mean? So bullish harami is nothing but we call this candlestick as a pregnant candle or a pregnant candle or maybe a small candle formed after a young red candle. So what is the psychology behind it? Like let's say market is going in a downtrend like a series of red candle. Then after that at support or some certain point this small uh, green color formed. The body of this candle is inside between the red and the inside of this red candle. It's like you can consider this red candle as a mom and it's a baby. So we can say harami means it's like a pregnant lady or a pregnant candle. So basically this candle is a baby of this candle. So whenever this candle is formed, it indicates a strong sign of reversal. So you will not directly jump in for a reversal. You need to wait for this high to be taken out to enter for a long or maybe to enter to buy side. Let's see this thing in our chart. Let's check this harami pattern anywhere in our daytime frame of Reliance. Harami. So basically I'm using this indicator to locate it. Let's see. Ah, we got it. So basically you can use this indicator in the trading. It will highlight you whether if this candle is formed. Yeah. So actually this candle is formed neither support or neither not resistance, so it's of no use. But when you go for this candle, it's formed exactly at the resistance level and the harami pattern is formed. See what has happened next. A sharp reversal. As you can see, a red candle followed by a green candle. So as I told in the earlier session, you will not look exactly the same what I've given in the pictorial way. There might be a weak present, but the concept remains same. See, you will go for a long when this high is broken so that you have a good risk reward or you'll have a long getting created. It's a bottom. So even this is also a reversal pattern. So basically you can see we have seen seen this candle as a single candlestick pattern, but here they have given a combination of two. So basically what will happen, so if a red candle comes after this, a breaking of this high, we will enter the long or we will buy it. So that's how we have seen, but here we have combined two candles. So the logic remains same. You can take two candle or only this candle. So this candle has a high weightage when it's formed at the support. So I'm not going to show in the chart because you guys can locate it in the chart, but the logic remains same. And three outside up. So even this is a three candlestick pattern where after forming a red candle, uh, you can say two white soldier, like we have seen three white soldier, like another green will be formed. So, but here we have two white soldiers so that it indicates a strong bullish reversal or a strong buy trend. On neck pattern, even this is a bullish reversal. A red candle is formed, and red candle is formed after, say, a red candle which pushes the price here from here. So how it works? A red candle is formed, then after that a red candle is formed, and it might red candle will open here so that it goes to the support. Then from here buyers push the price, and it has a neck like this. Whenever this candle is formed, you enter a long or you buy it. So basically breaking of this high or maybe here, and you will place the stop loss here. So this all are rare candlestick pattern. It's not mandatory to memorize or knowing this. It's just for no information. Then three outside up. I think it's a repeated one. Dark cloud. So this is something important pattern which is formed at the resistance level. Let's say price is moving up and it has reached the resistance. Whenever it reaches the resistance, the seller will push the price. So when a seller pushes the price, a red candle is formed. If that red candle is engulfing, or maybe it's engulfing 75% of this green candle, we can say that there is a strong chance of reversal in play. So how we will enter? Whenever you break this candle low, you enter, go for a short or you sell the stop. So let's check this in the chart. As I've told here, I can use the indicator. See, you have all the indicators in place. So you just add it and you look it for it. Okay, we have a dark. If you can see, this is a support level and the support got broken. After breaking the support, the price retrace here, and it's unable to break the support because it will act like a resistance. So exactly here, a dark cloud is formed. See, it has engulfed the 75% of the candle. See what happened next. Price has pushed down. So this has a significance when it's formed at the resistance level only. See, as you can see here it has formed, but see, price has moved up. But here there is no support or resistance. Bearish engulfing candle. Even this is pretty much similar to the dark cloud, but here the previous candle is engulfed by the red candle, meaning like the previous green candle is completely engulfed here, so that there is a strong seller are present. So there is a high chance like a price is going to reverse here. Let's check it. Whenever this candle is formed, there is a high chance that a reversal is going to take place. Let's check in a day time frame. As you can see here at the resistance, this engulfing candle is formed, then price has pushed down. Same as happened here. Engulfing candle which engulfs the previous candle, then price has pushed down. So whenever this candle is formed, there is a high chance the price might go down. So as I told here, this is a probability. There is no guarantee like price should go up. So you should check for a multiple confirmation before entering into the trade or buying the stocks. You should follow the strict stop loss. Let's say if you have entered here, and let's say if you are going to sell this stock and you're going to target this one, you should follow the strict stop loss like this candle. If you miss this, then obviously if it goes against you, you will end up into the loss. See, this is one classical case where this is engulfing candle. I entered here hoping price will go down till here, and I keep my stop loss here. Let's say a person finds this engulfing candle and he missed to place the stop loss. See what has happened. The price has reached up. Say you would have lost heavily before going for before booking it. So that's the importance of stop loss. So even though if you're following the candlestick pattern, it's always better to place the stop loss to limit your risk. Evening star, as we have seen the morning star, like red candle will come here, then a green candle, then followed by a very big green candle. This happens at the support. I've told this is exactly opposite. A green candle, a price is moving in the uptrend and it has reached the resistance. Then after reaching the resistance, the price slow down. Then from there, a red candle will form and the price will push down. This is exactly opposite of what we have discussed in the morning star. But instead, the color is the one which is varying here, and it gets this is found at the resistance level basically. So you can just try to plot it in the chart. And this is also same three black crows. There we called it as three white soldiers when a green candle is formed, but here we call it as a black crow. So in the uptrend, if three red candle is formed, then there is a chance that it price will move down. Black Marbosu candle. So price is moving in the uptrend. Whenever this big red candle is formed, when by breaking this you can go for a selling and the price will go down. There is high chance price will go down. Let's see whether we can plot this in the chart. Let's try somewhere else. is okay. See here, a very big red candle is formed. A very big red candle is formed. So which is formed at the resistance. See what has happened next. Price has dropped drastically. So this is high probability candlestick pattern which can be quite confident we can follow it. So whenever this great red candle is formed, so there is a high chance price will go for a reversal. Let's try somewhere else. IEX, I think we can find here. See here. Marabou candle is formed and price is moving down. As you can see, the volume it will be red and it's very high. So there is high selling pressure happening here. Three inside down. This is exactly opposite of three inside of what we have discussed earlier. And bearish harami, like we have seen the bullish harami earlier, like a red candle is formed. After that, a small green candle is formed. So, but here, if you see, a green candle is formed. After that, a red candle is formed. Let's see this only this example in the chart. Harami bullish. Let's check in Adani if we have it. Okay. I see here Harami candle is formed, but price haven't respected it. It started moving up drastically. So we don't have any example for this. Let's check somewhere else. Tata Motors. So this all are giving the false signal, I guess. Let's check in the weekly chart if we have that candlestick. I think I don't trust that indicator because it's not at all giving the correct Harami pattern. Let's try to locate by our own. Let's check in the Nifty. I'm unable to locate. Maybe I'll just check it around some other chart. If I can able to do that, I'll post in the next video. Maybe let's try for one last time. Okay, it's missing. Maybe I'll just try to locate some other chart and let you know, guys. Know. Just is a top. Even this is a reversal. This seems like a bearish engulfing, but the only thing, the start of the both the candle is remaining same. Three outside down and falling three methods, rising three methods, upside Tashki gap, downside Tashki gap, Mad Hat hole. So it's really hard to memorize everything. I'll just post this PPT. You guys can have a look. It's just known to information. So most of the candlestick which we have covered in the initial session. So using that, you can find the reversal pattern. So this all are some additional information. Good to know actually. So that concludes on the candlestick pattern. So one more topic which I just want to highlight here, which is on the which I should have done in the initial session, but I forgot completely. So there is something called some terminologies which I use, which should be known by you guys before starting in the market. So first one will be bullish. What is bullish? Bullish is nothing but a buying strength. So in the bullish market, buyers are dominating and price will keep moving up. So next will be bearish. I don't know the root cause of this naming. They they were just given the name. So bullish means it's the market is in the buy trend and market keeps moving up. Bearish means the market is in the selling and market will go down. Sometimes they used to refer bearish as a blood path, because it refers to the red candle. A lot of red candles will be forming, so they'll refer market as bearish or blood path. As you can see in a lot of Instagram posts or in the news, Dal Street is in the blood path like that. So it's not that some violence has happened. It's just the selling is so vigorous that a lot of red candles are formed. And one more thing, we call it as the same thing, long. Long means whenever a market is in the buy trend, we go for a long. Long means we'll buy and we'll hold. Then next one is short. Short is nothing but a market is in the downtrend, we sell it. For selling, we call it as short. So they'll refer for buying a share, we call it as we go for a long. For selling a share, we say it's a short. So next one is on the market trend. So as I told, bullish market. So you guys will be thinking when you buy a price, it just keep going like this. It keep going like this. So, and whenever a stock is selling, it might keep going like this, like a straight line. That's not the case actually. So it goes like a wave. So market will go up, down, go up, go up, down. So this is how a bullish market will look like. How will you say it's a bullish market? See, basically, we say this one as lower low. Then there will be a low formed, which we call it as higher low, meaning the low is higher than this low. So wherever the low formed here, we call it as a higher low. So this low will be protected, like this low will not be taken out, or maybe it will never reach here. Meaning if you buy a share, here, you keep holding it. So when this we call it as a retracement, price will come here, then it goes up. Price will come here, then it goes up. Price will come here, then it goes up. So in this case, when you buy here, your price will keep moving and you book the profit here. So, this is we call it as a lower low, and on this we call it as a higher high. Meaning whenever the price retrace, it forms a high. It keeps forming higher high, like meaning this high is greater than, sorry, this high is greater than this high is greater than this. If you see a market maybe in any time frame, like if you see 2 times it has formed like this, then the market is in the uptrend. You should look for a buy opportunity. So the downtrend is exactly opposite. So price will go here, then it retrace, then it go here, then it retrace, then it goes here, then it retrace, then it goes here. Higher low. Mm, Okay, so this is exactly opposite of uptrend. Like price falls, then it rises, then again it falls, it rises, again it low, and it rises, again it falls. If you see here, whenever price rises up, it breaks this high, sorry, this low. Same happens here. But if you see here, whenever price goes down, it breaks the high. So that's how it looks like. So third trend will be sideways. Sideways is like market. So you'll draw support and resistance. Market will be ranging between this one. It never forms a higher high or lower. Or like this, a market will go for a range. So this three are the only possibilities which you can see in the market. If you find the correct trend, you can make the profit. So it's advised to trade or buy a stock during trendy market. During sideways, you will not find the stocks price moves up. See, this is a Tata Motors. Let's take the weekly in this case. As I told here, price is moving up. So how does it? So when you zoom in, let's take here. So to price moves up, then it comes here, then it moves up, then comes here, then it's this, we call it as a consolidation range. So after forming the consolidation range, it moves up, then it again moves in the consolidation range. Then it came here, it raised, then again it came, it raised, and then it keeps moving up. So at high level, you can say price is moving, then falls, then again it moves up, then it falls, again it goes up, then again it moves up. So if you see here, this low which was formed here, it never reached. This low which has formed here, it never reached. The low which has formed here, it never reached. The low which has formed here, it never reached. So you can say this is in the uptrend. So why I've told this? So what you can do now? So whenever you find like this two waves, so whenever price retrace here, you buy the share here. So why you buy here? Meaning there is a high chance price will go up here, so that you entered at the low and you have a maximum profit given. So you will take the maximum profit. So this is on the uptrend. So when you go for a downtrend, maybe I can show in the lower time frame where price is in the downtrend. Yeah, exactly. This is a classic example of downtrend. So I went for a Tata Power 1 hour time frames here. Price came here, it retraced. Then again it went down. Then again it came here, it went up. It came here, it went up. It came here, it went up. Then it came here. If you see the low which was formed, it's every lows are protected, like it's never broken. And the same thing you can see here. This from here, the uptrend is started. It goes here, then it retraces, then it goes here, then it retraces, it goes here, then it retraces. So here the low whichever is formed here, everything is protected. But the high, whatever is here, it keeps on breaking. So you can find the trend everywhere, like 4 hours, 1 hour, or even day, monthly, everywhere the trends can be found. I can show an example of sideways trend. Yeah, this I can see here. This is classical side. See, price never went up or never came down. See, between this range, price keep moving up and down. So once this range is broken, so we can mark this as a resistance, this resistance is broken and price keep moving up. So that's on the trend. So in the next video, we will discuss about the chart pattern. I think with the chart pattern, we are closing the most of the technical analysis. Then after that, we'll start with the next set of sessions. Thank you all. Bye.